Welcome back, peaceful investors. Today we are breaking down NVIDIA's Q2 fiscal year 2026 earnings, and trust me, these numbers are absolutely mind blowing. Before we start, let me clarify all my content is only for educational purpose and it's not a financial advice. Please do your own due diligence before investing. Now let's start. NVIDIA just reported 46.7 billion in the revenue for the quarter. That's up 6% from the last quarter and an incredible 56% compared to same quarter last year. To put that in perspective, NVIDIA is now making in 3 months what many Fortune 500 companies won't even make in an entire year. Their profitability continues to stand out. The gross margin came in at around 72%, which means for every $1 of sales, about 72 cents is pure gross profit. That's a margin most tech giants, even Apple and Microsoft, would envy. Earning per share came in at $1.08 under GAAP and $1.05 on a non-GAAP basis. And even if you strip out the one-time benefit from their H20 inventory release, earning per share would have been $1.04. So the strength here is real, not just accounting tricks. Operating income surged to 28.4 billion, which is a 31% jump from the previous quarter. The net income climbed to 26.4 billion, up 59% year on year. These are record setting numbers and highlight how Nvidia is riding the AI wave like no other company right now. The headline here is simple. Nvidia isn't just growing, it's scaling profitability and at a pace that feels almost unreal in today's market. Now let's break it down by business segment because this shows us where Nvidia's growth is really coming from. The first up, data center, the heart of Nvidia's business and the AI revolution. This quarter, data center brought in $41.1 billion, up 5% from last quarter and a massive 56% year over year. That means nearly 90% of Nvidia's entire revenue is now coming from the data center powering AI worldwide. Next, gaming. Even though AI gets all the headlines, gaming is still a huge part of Nvidia's DNA. Revenue here was 4.3 billion, which is up 14% from last quarter and 49% higher than last year. So yes, gamers are still upgrading their rigs and Nvidia is cashing in. Then we have professional visualization, which includes GPUs for creative professionals, engineers, and designers. This business pulled in 601 million, up 18% quarter on quarter and 32% year over year. Not as massive as data center, but still showing healthy growth. And finally, automotive. This might be Nvidia's smallest segment today, but it is also one of the fastest growing automotive revenue hit 586 million, up 3% from last quarter and a whooping 69% higher than last year. This is powered by Nvidia's drive platform and AI chips going into next generation cars and robotics. So, across the road, all four segments of Nvidia's major businesses are growing, some faster than others, but the overall story is clear. Demand is strong everywhere. Alright, let's talk about something that matters even more than revenue or earnings on paper, and that is cash flow. Because at the end of the day, cash is king. A company can play accounting games with earnings, but you can't fake real cash in the bank. In the Q2, Nvidia generated a staggering 15.4 billion in operating cash flow. That's the money coming in from the core business after paying suppliers and covering day-to-day operations compared to the last year's 14.5 billion. That's an increase of about 6% year over year. And remember, last year was already considered a record AI boom quarter. The fact that they are still pushing higher shows that demand for their chips is not slowing down. Now let's look at free cash flow, which is what left after capital expenditures. Basically, the cash NVIDIA can use to buy back shares, pay dividends, or reinvest in the business. Free cash flow came in at 13.45 billion, which is almost exactly the same as last year, 13.48 billion. Some people might say, well, that's flat growth. But here is the key insight. Nvidia almost doubled its capital expenditure this quarter. The CapEx jumped from 977 million last year to 1.89 billion this year. Why? Because they are investing heavily in Blackwell and in networking capacity to meet the insane demand for hyperscalers. So the fact that free cash flow stayed stable while capex nearly doubled actually tells us the core business is pumping out even more cash. They are just choosing to reinvest it for the future growth. Now, here the part that blew me away. Even after spending nearly 2 billion on capex, Nvidia still returned almost 10 billion in Q2 alone to the shareholders through buybacks and dividends. And in the first half of the fiscal year, they have already returned over 24 billion. The board even approved an additional 60 billion buyback program with no expiration. That's a clear signal management believes the stock is worth investing in at these levels. And don't forget the balance sheet strength. Nvidia is now sitting on 56.8 billion in cash and marketable securities. That's up from about 43 billion at the start of the year. This is a fortress balance sheet. They have got the flexibility to secure supply, fund R&D and still hand money back to investors. So what's the big takeaway? Nvidia isn't just reporting flashy earnings. They are converting those profit into real hard cash at record levels. They are reinvesting billions into the future while simultaneously rewarding shareholders. Very few companies in history have been able to grow this fast, invest this aggressively, and still generate this much free cash flow. When I say cash is king, Nvidia is proving it quarter after quarter. And this cash machine is showing no sign of slowing down. Now let's have a look at their guidance for the next quarter. For Q3 fiscal year 2026, Nvidia is guiding revenue of about 54 billion plus or minus 2%. That's not just a small bump, it represents about 15.5% growth compared to the last quarter and an incredible 198% growth compared to same quarter last year. Yes, you heard that right. Nearly triple the revenue from just 1 year ago. On the top of that, margins are expected to expand again. Gross margins are projected at around 73.3 on a GAAP basis and 73.5 on a non-GAAP basis. And management says they still expect to exit this fiscal year with margins in the mid 70s range, which is extraordinary profitability at this scale. Operating expenses are expected to be 5.9 billion GAAP and 4.2 billion non-GAAP. That's heavy spending, but remember, they are reinvesting aggressively into R&D, AI platforms and supply chain capability to meet demand. They are also expecting about 500 million in other income, mostly interest earnings on that huge cash pile, and a tax rate of roughly 16.5%, so nothing unusual or worrying there. The big picture. Nvidia is telling us that growth story isn't slowing down anytime soon. They are looking at higher revenue, stronger margins, and more cash flow in the upcoming quarter, all while excluding any potential sales of their restricted H20 chip into China. That means if they ever do get approval or clarity on China, that's pure upside on top of already massive numbers. So the message is crystal clear. NVIDIA is not just winning the AI race, they are pulling even further ahead. Alright, beyond the financials, let's talk about what NVIDIA is actually building. Because this is what excites customers and keeps the growth engine running. The first, the Blackwell Ultra platform. CEO Jensen Huang called it the AI platform the world has been waiting for, and demand is extraordinary. Production is ramping at full speed, and these systems are designed for the next wave of AI models, especially reasoning AI that requires huge leaps in the training and inference power. Second, NVLink rack scale computing. This is more than just chips. It's about building full system that connect GPUs together like never before. This is critical because as AI models get larger and more complex, the bottleneck isn't just compute, it's communication between those compute nodes. The NVLink is NVIDIA's answer, and it's already being adopted by hyperscalers and enterprise players globally. Third, the global expansion. NVIDIA is working with governments and the tech leaders across Europe, including France, Germany, Italy, Spain, and the UK, to build out Blackwell AI infrastructure. We are even seeing the world's first industrial AI cloud for European manufacturers. This is how NVIDIA cements itself not just as a chip maker, but as the backbone of entire economies. Fourth, partnership in science and healthcare. NVIDIA announced collaborations with Novo Nordisk to advance drug discovery, and they are helping scientists push boundaries in areas like quantum algorithm and fluid dynamics. These aren't just side projects, they show how AI is becoming central to breakthroughs in medicine, energy, and beyond. And let's not forget their consumer side. Gaming and AI PCs continue to grow, with DLSS technology now is more than 175 games and RTX GPUs optimized for AI tools. It shows NVIDIA is building an ecosystem that stretches for gamers to researchers to global supercomputers. Lastly, in automotive and robotics, NVIDIA is rolling out Drive Thor and Jetson AGX Thor platforms, which are powerful AI supercomputers designed for cars and robots. Imagine a future where vehicles and machines think faster, safer, and more intelligently. NVIDIA wants to power that future. So the big picture here is clear. Nvidia is not standing still. They are not just a chip company anymore. They are positioning themselves as the platform company for AI, robotics, healthcare, and even entire national infrastructures. And that's why investors and customers like are watching every move they make. So that brings us to the end of our deep dive into Nvidia's Q2 earnings. Right now, Nvidia is trading around $180 per share and at a forward PE of about 32 times. The market is paying a premium for the stock, betting that Nvidia's earning growth will keep compounding, with revenue expected to almost triple year over year next quarter. That premium may just be justified. But here is the real question. What do you think Nvidia goes from here? Does it keep powering ahead as a leader of AI revolution, or are we getting close to a slowdown? Do you see this stock hitting $200, $250, or even higher in the next year? or do you think the valuation is already stretched? I want to hear your thoughts. Drop your prediction in the comments. I will be replying to as many as I can, and your insights might even make it into my next video. As always, I'm Ricky, the Peaceful Investor. If you enjoyed this breakdown, hit the like button, subscribe to the channel, and share this with a friend who is following AI stocks. And remember, this is for educational purpose only, not a financial advice, and do your own research. Thank you.